Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, May the 3rd, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses. We have two main hypos, or our trade plans. We do not know what the market's going to do. Therefore, we create plans based on who takes control, and then we wait to see who is in control and then execute the plan that best suits the need. We do create two alternative hypos for expansion days or trend days. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and then we do live trading and analysis during the course of the regular trading hours. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So taking a look at yesterday, yesterday we are looking for a open auction in range. We were looking for a move down into the 2640 area, and then we were looking for the buyers to step in and rotate us up through and out of the prior day and push up into that 2669 area. That did not happen. Our secondary hypothesis was an open auction, a failure breakout of the range high from the prior day, or a false breakout, and then a rotation down into yesterday, the prior day VPOC. And basically we got that, but it just went sideways for the longest time, and we didn't get the reaction until the FOMC announcement. And the FOMC announcement came out with no rate change. They looked like they were going to take it up, and they failed to break out. And then the sellers stepped in and just stayed on it. And we ended up getting a neutral extreme day with a move down into the 27 and a quarter area and closing down near the lows. Taking a look at the of the overnight inventory. Overnight inventory was pretty balanced during the course of the session. In fact, it was more long than short. And then this morning, I don't know what the news was this morning, because this move down happened before the economic report on the jobless claims. So rotated is down to the key line in the sand at 1850. Pushed through to the 2617, and then so far off of the earnings report, we've moved back up. So inventory right now is pretty neutral, I would say. It's going to be an interesting open, especially because we're going to be opening below yesterday's range. Looking at the economic report, jobless claims came in. They were expected at 225. They came in at 211. The trade balance was expected as minus 50 billion, came in at minus 49 billion. So for the most part, the news was pretty good. We have, in 56 minutes, we've got Bloomberg Consumer Confidence, we've got Market Composite PMI, Services PMI, and then at 10 o'clock will be the bigger of the news, and that's our durable goods orders, factory orders, and everything that goes along with that, including the ISM non-manufacturing. Other than that, we've got natural gas at 10:30, and that's about it for scheduled news. We are in the height of earnings season. Earnings again, except for Tesla. What a story that was yesterday. For the most part, the earnings are coming out still pretty good. Nothing really big after. We do have GoPro, Arista, Activision, but for the most part, or Pandora. For the most part, it's not going to be a really big earnings day today. So let's take a look at the macro to micro. Each morning I like to start my day looking at a simple chart. I use a 9 EMA, 20 SMA. What I'm doing here is I'm looking at where we are in the time frame of the different periodicity. I start with the monthly and I work my way down. What I'm looking for is, do we have good slope and separation? Is the trend strength strong, or are we coming down and challenging the trend by challenging the 9 or breaking the 9? And are we getting a possible trend change with the break of the 20? On the monthly, we had 14 months of one-time framing up. February, we violated the one-time framing. It looked like they were really challenging the trend here, but they held it in March and April, and so far in May, we're holding on. So the trend on the longer time frame, remember, does not get violated until we get back down into the 2400s. So that's a little ways away. So even a pullback is not really a big deal. On the weekly, a little bit of a different story. We do have a break below the 9 and the 20. We're looking at a possible trend change here on the weekly and a move down. And we tested a key level this morning in the Globex at that key line in the sand at 26.1850. We popped back up on it. So that's going to still remain our key line in the sand today. Going to the daily, you can see that same picture. We're starting to get slope and separation to the downside, and it looks like we're going to get a possible trend change on the daily. But it's still very early. Going into the intraday, you can see that that accelerates, and we've got good slope, good separation. We failed to get back above the 20 on the couple tests that we had so far yesterday, and so far in the Globex, it's been pretty pretty down in trend-like scenario, and we keep failing off of the 9 EMA. And going to the 30-minute. You can see that we basically consolidated throughout the Globex, and now they have this strong move down, and we've got a little bit of a technical gap here, but nothing that I would really be concerned about. So taking a look at the structure of the market, again, nothing really changes in terms of where we are. Why did this move? This is supposed to be over here. So I'm running a micro composite from the breakdown day of February 2nd, and we've got this large value area that runs from the 2725 area down into the 2602 area, and we've just been traversing the value area back and forth. So we're really still in balance. Key to note is that we do have, let me get rid of this one. I don't know why that one is there. Key thing to note is we do have a shift of that VPOC back down. The microcomposite VPOC was up at the 69.25. It is now shifted down to the 2647 area. And the 2-day and the last 2 days and the 2 days that we moved down here, we had a VPOC down here at the 33 area, and this is a pretty prominent high volume node here. And of course, we're coming back down to that key line in the sand down at the 1850. And if we break that 1850, I'm looking for them to move down into that that 11 to 10 area, which is the value area low of this value area that runs from the breakdown day, the gap down day on March the 22nd. And then possibly a push down to the 2605. Key level to hold, obviously, is going to be the value area low and that 2601.50 to 2602. Anything below that, remember that the longer time frame microcomposite VPOC is all the way down here. If I draw a profile from the start of this gap up right here, you can see that the most traded price is all the way down at the 25.8575. So if we break the 2600 today, we could see a continuation pattern down into that prominent VPOC. So let's take a look at our overnight levels. We've got a triple distribution There's an LVN right here at the 2350. That's right at that range low from from Tuesday. So we're going to put a trade level there. Of course, the range low from yesterday, 27. Our overnight high is up at 36 and a quarter. Now there's a lot going on here at the 26.36. We've got our April month open. We've got the LVN from yesterday's lower distribution. We've got the overnight high, and then we left a TPO single. If you look at the market profile, we left a TPO single here at the 26.3650. So if they do get back inside of yesterday's range and go up and come into this distribution, we're likely to go and push through to the LVN on the other side of that distribution, test the April open and test the overnight high and that TPO single. Below us, key line in the sand is still going to be the 26.1850. Our daily 20 period ATR is running at 38.53. That's the full session average true range. So off of the high overnight of 26.36 and a quarter, our downside daily ATR target is going to be 25.9775. So move this down here. This I don't have to worry about. And so far, we've got a little bit of a weak low overnight, but our overnight low is at 17. So off of the overnight low of 26.17, our upside daily ATR target is all the way up at 26.5550. So what does this mean? It means that we have range capabilities right now based on the average true range without breaking the 20 period daily ATR of rotating back up into the 55s or breaking down and breaking below 97. We still have a naked close down here at 26.0450. Very key area at the 26.12, and then the other really key area, and which is going to be our key support, is going to be that value area low at the 26.02 area. And I'm just going to expand this out so it goes 26.02 to 26.01. And you've got the centennial number, but I think the centennial number is not going to matter much today. So in terms of hypotheses, so we're going to be opening up outside of range, outside of value. My hypo 1, let me get my drawing tool. I'm looking for a open auction out of range. I'm looking for a move up into the 27, and then somewhere between 27, okay, and that 36. I'm looking for the sellers to step in, rotate us down into the 12 area, chop down here, and push down through and come down and test the value area low, take out that naked close, and test the centennial number at 26.01, and then find a base and start working our way back up. That is hypo 1. Hypo 2 is a open auction out of range, push down into that 12 area, base, move back up, fight the open, and then push up into the 36, and then come back down and close somewhere in the 27 area. That is hypo 2. Hypo 3 is going to be a gap and go day, a continuation down. Let me just move this down. Hypo 3 is a gap and go failure to take out the gap. So, oh, sorry. Open auction out of range, failure to take out the gap, come up into the 23 area, that's an LVN and a prior range, and then push down into the 12 area, chop there, and then fail, push down, okay, fight the centennial number, and then have a late date probe and push down into this 2685 where they're likely to base and start rotating and closing somewhere in the 2597 area. And last but not least is a take back day. We've seen a lot of these lately where we open auction out of range, push down, fail to break the 1850 again, buyer step in, rotate us up into this 36 area, and then get continuation up into that 47 and come up into this 47, maybe a late day probe to test that 55 area, but closing somewhere in around the 47. So those are my four main hypotheses for the day on the ES. Just moving over to gold really quickly. Get rid of this drawing tool. Gold broke through that 1990 area. We pushed down. The target was the 36 or the 1306.40. We pushed down a little bit lower into the 1304 area, pushed a little bit through the LVN, but buyers stepped in, rotate us right back up into that 18 level, and right now we're trading at 15. Balance in this area is at 1310, and I think we're going to probably see them chop back and forth today between that 19 area and that 10 area. If they get above the 19, look for them to get the continuation up into the 1325 area again, and they found their buyers at the lower 1300. If we fail to get above that 19, again, I'm just looking for them to base here, and then I'm still looking for them to come down and break through that 1300 and come down into the 1290.80. So that's what I'm looking at in gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.